against the backdrop of several major tech unicorns considering IPOs this year, you spoke with Social Capital's, well, he was anyway, Chamath over the weekend.
He's still there.
Yes,
yeah.
Well, yes, he is. Who called startups a Ponzi scheme, saying, quote, if you thought the financial crisis was a big deal around mortgages, wait till you see the amount of debt companies have. Of course, this as Lyft posts a near $1 billion loss for last year in its S1. Yeah. This interview with Chamath, by the way, one of the wildest.
Off the rails. Thank you.
People have to check this out. I've interviewed Chamath. I know him.
Yeah.
We can't even begin to talk about that.
Yeah.
Lyft.
We can.
We can, but oh my goodness. But Lyft.
Yeah, Lyft.
You're critical of the structure, the amount of voting control the founders are going to have. We're just talking a bit about that with Roger. I'm going to ask you the same question I asked him. Do you think how Lyft turns out could tip whether or not this becomes the default going forward? Because since Google, for popular companies, it sort of has been the default, but it hasn't always worked out.
Yeah, well, you know, it worked out with Google all right because they haven't run into the shoals, right? They haven't had a big thing like what's going on at Facebook or anything else, because you can't do anything at Facebook because Mark controls everything, which may be good in the end. But you know, other companies didn't need this to run their companies well. I know there are excuses for it and why they want to do it, and of course you'd want to have complete control. But the idea that these people, once they go public, they run the company like a public company and they can't keep it private. So the thing about Silicon Valley that I keep saying is they want everything. They want all the benefit and none of the responsibility. And if they want to be they can do this, and maybe investors will agree to it, but I think it's ridiculous.
And the way this links in, I think, to the Chamath interview is that, to me, it was amazing that despite all of the big promises he made about changing investing in venture capital, he was unable to say, I'm sorry about any of the things that he didn't deliver that perhaps people expected. It was kind of saying, well, you're welcome.
He did. He said another word with "you're welcome."
He did.
I think what he was saying is he just didn't want to do this anymore, and then he had people that he made a lot of money for, and he returned capital to them, and he had enough, and he didn't want to work anymore, and so he was comparing himself, I think, to Michael Jordan. He just wanted to stop playing basketball, or he wanted to play baseball, and I think he has a very good point there, and I think a lot of people in Silicon Valley are kind of on this treadmill of, you know, he was saying bigger houses, bigger vacations, better houses, better planes, better this. And I think he was hitting at a really smart idea in the middle of it. And he just didn't want to do it. Now, he made certain promises and then he just decided, hey, he didn't want to do those, but he did return capital to people and make a lot of people very wealthy. And so he was sort of irritated that people were angry at him for making them wealthy, and he didn't want to keep making them wealthy, I guess.
I want to go back to this idea of startups operating as basically operating as Ponzi schemes. Because you do have all these major IPOs that are expected this year, Lyft being probably the first in the pipeline. A lot of retail investors probably out there saying, oh, you know, I want to get in, how do I get in? So what do they need to know about that structure?
I think with the Ponzi scheme, what you're saying in the case of, say, smaller startups is that you keep putting money in and it all goes to Facebook or Google, for example. Or in the case of Lyft, AWS. That's a lot of money that goes to AWS for their massive computing needs there at Lyft, and Uber and the rest of them. And so you're just sort of playing, it's all going to Amazon and those, and then they buy things, and then it's just, it's sort of this circle. And I think he was trying to get the idea that it reminds you of AOL that used to invest in startups, and then they advertise on AOL, and then they do this. And so the question is, are they viable businesses in and of themselves that can continue forward without these massive losses? Now, some companies like Amazon managed to jump the shark, I guess, because they were showing massive losses for a long time and then managed to find businesses that were sustainable. Is that possible for a lot of companies? And in some cases, when you look at these numbers, they're enormous losses. On the other hand, they're enormous markets. And so the question is, which one is going to dominate? Can two of them dominate? Are your rides being subsidized by venture capitalists? The answer is yes.
But every generation has one of these. They used to say that about Sun servers back in late 90s. I mean,
there's many.
And when it came to networking equipment, same thing. Well, you know, this company's just propping up that company by spending too much on all of this, and you know, eventually It's going to go down the toilet. So is it a Ponzi scheme, or is it just how Silicon Valley works?
Well, you know, Google sells advertising to lots of people, sure. And it was pretty much always profitable from the beginning. It was really quite a good business from the very beginning. And it sold it to businesses not just in Silicon Valley. It sold all over the place. Microsoft sells software all over the world. And so does, you know, Uber and Lyft and all these companies. The question is, can they sustain these low prices? Like, can everybody sustain these low prices that are kind of subsidized? That's the whole point that Chamath was making, is that they're either subsidized or it's cooked a little bit. And then everybody's in it to do the growth thing, and there's a point where growth can continue. I think it's a good thing to think about when there's a lot of these, or when there's a lot of direct-to-consumer companies or mattress companies or whatever it is. Some of them are not going to make it, and I think he was making that salient point in that epic interview, I think. So.
It does feel like the floodgates are opening right now with IPOs. I mean, we're going to get Lyft and Pinterest and
Airbnb.
Potentially Uber or Airbnb. So what's driving the mood? Is it just that the market's doing well?
Some part of me feels like the getting's good, like that kind of thing. Part of me feels like it's that, and it's time, I guess, and that these endless rounds of funding aren't going to continue. So let's bring it to the public markets to let them pay for it. And of course, a lot of these are great businesses. I have a lot of regard for what Airbnb's doing. At the same time, it's going to run up into the headwinds that every other company runs into, a hotel company or whatever. And I think one of the things we're beginning to realize, and I pointed this out when people were again surprised by a recent other Facebook thing with the phone number, is these are businesses like everybody else, and they will do things in their best interest. They are not here to change the world.
Yeah.
That's a really nice bit of twaddle that they like to peddle at you. But the fact of the matter is they either survive as businesses or they don't. And some of them are good businesses, some of them aren't, but eventually the price comes due, the bill comes due, essentially. We'll see. And some of them are great businesses. And if they can get it right, great for them.
And they just want to be happy in the end.
Oh, come on.
Kara.
You want to be rich, and that was the problem.
And happy, yes.
Okay.
Thank you,
right.
Kara. Great to have you.
Thanks.